once so talked about I wanted to hide this. I don't know why TradingView has updated this area. I should be able to hide it. They've updated that so I can hide it from you. Let's hide the candlestick. So when we talk about structure, we talked about highs and low. So market structure. Because so many times we've talked about market structure as a foundation of the way we trade, of smart money concepts, right? You agree with that, right?
Yeah.
So remember, when we were trading retail, what we are being taught is a trend, not a structure. What we are being taught that we think as structure is trend, right? We're being taught retail trading, trend, retail trading. So what we are being taught then is trend, right? So we are being taught trend. So we tend to relate trend and structure, but structure is more deeper than trend, right? Than trend. So what we were being taught is in retail is trend. So the deeper understanding of market structure is smart money concept, right? So with the retail trading, if you can't hear me clearly, let me know. So I'll be able to know if I would adjust my network. So with the trend trading,
I can hear you.
Okay, with the trend trading, what is being most emphasized on is bullish trend, bearish trend. So bullish trend, bearish, and ranging, right? So these are the things that have been mostly emphasized on in retail idea of market structure. So when we talk about trend, we can talk about the bullish trend, where we have higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, right? That's for the bullish. So for the bearish, we talked about the lower low, lower high, lower low, lower high, lower low, lower high, and lower low. So that is the bearish. And we talk about the ranging, where we have indecisiveness in price. So where we have price in a box, right? Price bouncing up the ceiling, which is resistance, and the floor, which is the support. So this is the retail idea of market structure, which is literally on the fact of higher highs and higher lows. They are not totally wrong, but to us, we see it as trend, right? Because whatever trends now doesn't absolutely happens to happen all the time, right? So, and we understand that when we come to smart money concept trading, smart money ideology, logical explanation, right, of market structure. So when we talked about this one, it gives us like the in-depth of what these things entails. Anybody can easily identify what a trending market is. We can easily see that market is bullish, market is bearish. But when we talked about the market structures, so this is where we talked about the swing points, right? So it helps us understand the swing point in price, right? Market structures ideally gives us an idea of swing points. Market structure Are you with me? Gives an idea.
Yes, sir.
Details idea about swing point. Swing point, external structure, internal structure, and range liquidity. And range liquidity. Range liquidity. So by the time you have an understanding of this, it gives you, that is why we say details or detailed. Anyone. So Sparmoning logical explanation of market structures gives details idea about swing points, external structure, internal structure, and range liquidity. So all of these, right, are trends. But because we talk them as the, higher high right there and higher low, those are just the few information we could get here, lower low and lower high. So this is a range, right? So, but then when we talked about that of the concept, it gives us a details idea about, all of these informations that we have. For swing points, we could talk about, we don't have to talk if it is bearish or bullish or not, but we just understand the significance of a price, right? So we might have price, giving us consistently, all of this. And suddenly we had break structure lower. So remember that when we want to give a detailed explanation of this, we pick a swing point from the swing low right there to the swing high, right? Because this is one single move. And all of this price, lows and lows and lows, are internal structures of the swing point. So when we move from point A to point B, the price is not always moving up to that level. It's not as if we throw a stone. The price have what we call the sideways movement of price, which is wave, right? You could use the wave theory to identify, the sideways movement of price, which is going to be moving, in wave patterns, right? So all of the lows of the wave of the pullbacks are internal structures. So ideally, it's just from point A to point B, but because we don't move in a straight line in the chart, we move sideways in wave, right? We tend to identify what we call the internal structures from the swing point, right? You have the swing point, the swing low, and the swing high. So it doesn't matter which of the structure legs we have. It might be bearish structure, it might be bullish structure. Now, this is in a bullish structure scenario where we identify the swing low and the swing high. So how do we identify what low is swing and what low is high? So we should have previous price action that was broken. So let's say we have this and we broke this high right there. So where was the low, the last low before we broke the previous high? This low. So this low becomes the swing low that took out this high. So this becomes our swing low, right? And this becomes our swing high, right? Why do we identify a swing high? Our swing high is identified when we create a new low, right? Now, because we've created a new low, this becomes the swing, the swing high. But until we create a new low, we can't ideally talk about swing high, right? If we did not create a new low, yet we can't talk about swing high. So once we create the new low, then we can identify a swing high. I don't know if that makes sense. A swing low here was confirmed because we created a high. So we identified the swing low. So a swing high was confirmed because we created a low. We identified a swing high. Does that make sense? Again, I'll go
Yes.
again. A swing low was confirmed here because we take a high and confirms a swing high. That's a swing low. That is when we confirm the swing low. A swing high was confirmed when we take a new low. That's why we can confirm that is a turning point for this move right there. So this becomes a swing low and a swing high. All of this becomes the substructure, which is the internal structure of price. Does that make sense? So here we could then identify different structure facing price. We could identify the bullish structure phase up
Yes.
until this area. And if we start to switch back, we could then start to identify the new structure leg. Remember, like I said, retail talks about the trend, right? Which is higher than high low. By the time we start to go into advanced market structure, which is what the family logical explanation gives in source of the market structure, you can say this is a you know higher low, right? Higher high, right? Higher low, right? Higher high, right? Then higher low. So what happens when a new higher low is taken? You know, retail talks about retail talk about you know a break of structure from the higher low being taken, right? Smart money concept talked about change of character. It's practically, ideally, not the same thing, but we can use it at the same thing. So we understand that this low is a significant low for the higher high that was created here, right here. But now, when we break the low, does it mean a break of structure? Does it mean that the old trend that we have in this structure has switched? Of course not. It could mean price is taking internal structure before it continues into a new higher high. Does that make sense? So this not necessarily means that we've broken the structure. It means that we take out internal structure liquidity. And that is what is different between the smart money concept. Because in retail, by the time we take out this low, retail ideally understand that now we have a break of structure. What are the confluences that they will look out for to say that the structure has broken? They would say, now this has broken, price has taken this low. That's a break of structure for retail. Because higher low has been broken, right? So the higher low, which is broken, becomes a break of structure for retail. And again, what are the other confluences? Their trend line. They would say also the trend line has been broken because price has broken the low. And what will they be looking for? They'll be looking for a change
The
in trend,
retest.
to sell. That doesn't mean they were wrong, but technically this does not give the details information about the trend, right? So why should they trend? Because it took a previous low be considered to change trend. What has been bullish for a while? Why do we have to consider the change of trend just because we take out a low, right? So, and that is what smart money logical explanation gives to us, a detailed understanding of what goes on. We still have the same scenario in here where we broke structure. We could say ideally that price, have broken trend. We could also be doing the same thing, right? But that does not confirm the logical. The first one, which is broken, is our intent. The second one is our break of structure. So when we go again and take out this low, we can say, okay, now we are starting to give an intent, right? So, but then before we have that, we always have some kind of reactions in price where we had a pullback that will retest that and we come into that low, right? And significantly, we understand that our structure perspective is bullish, right? Just because we have the short term, head and shoulder in here, doesn't necessarily mean that price is going to target the low. There are patterns in retails where, they will tell you when price is, practically bullish, and we create, an head and shoulder pattern model, we have to target the next low, right? Because they see that the neckline right here has been broken, and we have your left shoulder, your head, and your right shoulder. And now technically they are telling you that price we have to sell all the way to the downside. Neckline is broken, the trend is broken, and the retest has been confirmed. They want to sell. Yeah, it could happen, but not all the time. We have to understand that there's a driving force to why price is bullish at first. Just because we take a liquidity off some areas doesn't mean that price is going to sell off, right? So this does not define our break of structure. This defines liquidity stops, right? And this defines its permanent
Hmm.
traps. So in this case, we are given what we call a logical explanation, what could mean, what could happen, without having to, think that this pattern is what will lead price to sell to the downside. Am I making sense?
Yes, sir.
Is it complicated? Am I making sense?
You're making sense.
Okay. So
I'm
from this
understanding.
perspective, you would see that even though we might be reading the same thing, we might be reading the same, price action, it's not the same view. It's not the same point of view that we have with the retail. Of course, everybody can see what a trending market is, but when we start to break down price in terms of what structure is it giving to us. So now going back to this area where we talked about, the structure from a swing point, a swing A and a swing B. So we are still within the swing point, right? Even though there's a retail relative broken structure, what we can do is start to look at a swing point and say, okay, we have premium and discount. And once we trade into a discounted price, if we protect this low, we will continue higher at a point in time. So we wouldn't be looking for price to overly continue downward. We'll be looking for price to switch back from the substructure, which is internal structure that has been printed recently. Then we can start to look for a change of character back up, where we've taken enough liquidity from the internal structures. Then we can continue with more long position. Does that make sense?
Hmm. Yes.
So um I should give an example and I will come back to this one. So I'll give an example on GBP so that we can always get an idea of what we're talking about. So I'll give an example on JPY. So this area here. So what our structure relatively saying, right there. So this is a 2 hour time frame. You know, you can say right there. a swing point, low and high. That's a swing point. So what do you have here? Why do we confirm this low? Because we break this high, which is our low, our high that broke this. But by the time we start coming from here, we start coming from lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. So when we create a lower low, we create a high. So this high has been confirmed and this becomes a higher low, right? So low, a high.
Yes.
High right there has been confirmed and that confirms the swing point to us. Does that make sense? So once we confirm that, so that has been confirmed and we can go here. So if the retailers are going to mark structure perspective itself, what are they going to be marking? They're going to be marking a low, a high, a low, a high, a low, a high. So now that confirms that what there's a break of structure, right? But does that confirm that the swing point has been taken? No. Does that mean that we've breached? No. So they confirm that and they start to see the trend, right? We start to see this trend right there. So what are they looking for? A retest of this area right there. And they're looking for sales. Isn't that so? So when they're looking for sales, of course, price giving them
Yes.
sales and they have the stop loss above here. What do you say? Price took them out and start to sell again. And they start to say, okay, price is starting to sell. And they go back in here. What would they say? Price has closed back below the area of, resistance. And now they look for retest and they resell again. But now, as that taken out our
Resistance.
swing point, that has not taken out our swing point. So we still have our swing point here and our swing point here. So price is still bullish, right? So we are not looking for sales. So we are not looking for sales.
But
So
okay.
what can we have here? We can always have uh
What if
our favor, right? So we can always anticipate that price can still trade at any point in time into equilibrium or area of discounted, right? So we can still have all
yeah.
of that. So price can, because we still valid that price can still trade into those areas, so we don't have to rush to want to pick trades, right? So price can still trade into the area. So once price is into that area, then we can look for buy. So you can see that while they're looking for sales, we're still so much concerned about our swing point, which are swing low and our swing high. So once price trade into any area of discounted within our swing point, then we can obviously know that we want to look for buy. You can see the way they look at price and the way we look at price. You can see that it's, even though they are looking at the trends like this, we're looking at the trends like this, we could easily identify the structure itself without even having to say this is our trend lower and lower low. I don't know if I'm communicating. It was just from details
Yes,
from.
sir.
Is it complicated?
No, it's not.
Do you actually understand at all?
Yes, I am. I'm actually understanding.
Can you highlight the point I've just made in the few minutes I've been talking?
So, from what you have said so far,
Mm-hmm.
this. Sorry, let me pick this. So this is the low, and this is the
Mm-hmm.
high, and
Mm-hmm.
then this breaking this move breaking the below this doesn't mean we have a choke.
Mm-hmm.
So it we are still in a long market, as in a bullish market, while retail traders are looking for sale because of this break of this retest here. So that's what I get from this.
Okay, now.
So I'm trying to play this off.
Okay. Okay. Let me take this off. Let's assume you want to teach me now. Now, teach me what the structure perspective is. Let me hear from you. Let's assume you want to teach me this right now. So how will you start?
Okay, that's it, you know. So this is so we can see that the market is in a downtrend.
Mm-hmm.
It's obviously in a downtrend. But since we had this is the last low that we had, and we can see that we have a change in market order right here.
Mm-hmm.
So this low led to this high being broken.
Okay.
So that's what we buy. And since we're seeing the premium, so from what you've taught earlier on, we'll be looking for the buy in the discounted area. So that's what I get from everything. Is that okay?
Okay, but no. Okay, I'll just give it that maybe you don't like to teach. So what I mean, when we talked about price action itself, is that understanding what price could do. Don't necessarily mean by discounted or premium. So this gives us a detailed understanding of our swing point, right? So we have a swing low, we have a swing high, we have a break of structure. I haven't even talked about the bearish trend. This is a trend itself, but structure is
Yeah.
what we are reading. We are reading what's going on within the previous high and previous low. So these are previous high and these are previous low. And low could mean that this could, continue lower, right? Which is fine. Well, in this case, we didn't continue lower. We take out this high, and that's a relative break of structure. When starting is done, this confirms. Now, the breaking of structure above this high confirms, and when we have the pullback and created the low, this low confirms this high. This break of structure here confirms this low. This becomes our swing point, swing A to B. So remember that. But if retailers are going to be reading price, I said they'll be reading price from this low, lower low, and I say this, 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 and this. So when this becomes change, they talk that this is break of structure. When this becomes break, that is break of structure. Because of these two things, they're looking for sales, right? So they want to look for sales content because they overall think the trend is still bearish without following the structure itself. Can you see the difference between what I'm talking about, structure and the trend? Can you now spot the
Yes. All
difference?
right.
Can you spot the difference now? Even though the trend at that point in time was that we're bearish, doesn't necessarily mean that the current structure is also aligned with the bearish trend. It means that structure itself is printing something else that we have to pay attention to right there. So now,
Hmm.
once they see this as their break of structure, they start to identify sales, start to do their trend line, start to do their fib levels from this and this, and they look at their resistance area and they say, yeah, this is an area of resistance because price has broken back, head and shoulder pattern, this left head, this head, the shoulder, and the break below the neckline. That's an head and shoulder pattern as well. Isn't that so? And that confirms a lot of sales for them. The resistance, the retest of the trend line, the head and shoulder pattern, because retail saw this left edge, shoulder, and right shoulder, and their SL is above here. And once they see that, they say buy, sell from there and sell to the next low. But now they are not paying attention to the main structure, which is practically price has taken this area, and that means that for now we have to understand that what price is doing is different from what the retailers are doing. So what we look at for is okay, where exactly can price trade into, and we could make a case for you know that's why we use our premium and discount to be able to understand where price could trade into. And we know that if we want to look for long against tier short, we have to look for long in an area of discounted or equilibrium of that price. So we can know where exactly we should be expecting reversals to come for longs against the retail long positions in trend, right? So now our own structure is our own move is based on structure perspective. Where they are looking for sales, we're looking for long. And you see when price tap into equilibrium below an area of discount premium, you see what we did. We started long for long. So at that point in time, we are able to establish that price has tapped into then clear all of this liquidity that's sit below here. And now we start to see lower time frame change of character, which would enable us to get into long. We could go into lower time frame and establish, a stop on the change of character, then we can get into lower time frame entries here. But that's not why we are here. Talking about structure perspective and how this affects your decisions to understand the trend and the structure. So you see that different between the retails and the smart money ideology of structure, you can see there is a lot of differences in understanding what is happening in price, where price is trading into, not just depending on, a trend line that is broken like this and looking for the retest or a resistance or another shoulder pattern. It's more of a logical details explanation into price action itself. So when you talked about reading price action, I think the best people that read price action is the smart money concept, right? Because we understand what is happening. Now we could go back into our chart. And now, I think since I give you a pictorial view of this, that should make a lot of sense already. Is it this? Are we talking on this one? JPY. Was it not FXM that we're using? JPY.
Yeah. I didn't check the broker.
Let me see. I want to be sure which one I will using. Okay, we're using this. So so you can see this give a detailed, explanation into those cases, right? You see, this is
Yeah.
what I will explain, and the same thing we went to go and explain with a swing point. So also from here we could also deduce, yeah, we could also deduce external structures and internal structures from the bearish trend. So on the ranging as well, retails will tell you that you should stay away from something like this. Why are they telling you? Because they don't understand. They can't pick out the structure. They can only see that price is clustered. But with harmonic concept, we can still trade this. Retails will tell you to stay out of trend because there's no clear directions. But we as a harmonic concept, if you understand the details of this, in fact, we can take a ping pong trend buy and sell in this kind of market. So for harmonic concept, we understand the details explanation of price, and we can still trade this area because we know what price, where price has swept liquidity, where price has broken structure, where there's a point of drawn on liquidity, even before the breakout happens. I don't know if that makes sense.
Yeah. That makes sense.
Because we understand the details explanation of trends and structure itself. So we can give a very logical explanation into them without having to complicate. Or where's lower highest, lower lowest, and what is break of structure, and what is the true intent of price. Does that make sense? So
Yeah.
I feel by now, if I'm still just going like having to explain, having to explain the details of structure, there are a lot of videos on the Discord that I've talked about market structures. I think you should have a look at that. It's more like me going back and forth on structure. But right now, I think you should understand structure, perspective. And I see your text as well, which is fair value gap. We don't pay details attention to fair value gap. But fair value gap can be a drawn on liquidity force. We don't use them as entries in our style of
Yeah.
trading. Yes, if you trade the ICT, you can be using them as entries. But if you trade SMC, just the way I teach you, some SMC trader could use that. But the way I teach, I don't use fair value gap as entry, or we use them as targets. Does that make sense? Point of interest. I think we've discussed a lot of point of interest uh,
Yes. Yeah.
so by
In the
now,
video.
what exactly I'm having a checkup scheduled by 1 o'clock. I have to start dressing up.
Okay. Okay.
Um, we talked about point of interest. What are the things that are still so complex? And we could still go back to. I haven't really gone details into all of this. With all of this, I've talked about swing point, external structure has not been detailed. But what I mean is there are a lot of explanation I've done in previous videos. We talk about external structure. Even with you, we've had a session on external structure and internal structures, and also
Yes.
I've not really gone details into range liquidity, and this is what that entails, and your build up as well. So I think the range liquidity is where I talked about the range, the initiations, and the continuations. So initiations, mitigations, and continuations. Yeah, initiations, mitigation, continuation. Um, so I think that's where the range liquidity comes into play. So what are the major challenges again aside that? Because I think I'll put that down. And
My major challenge is just just like you said, trust me, I've gone through the mentorship course, I've seen the videos. In fact, sessions that we have with Rupi
mm,
or the sessions that you share, like I go over them
mm-hmm,
and I practice them. But I
mm-hmm.
don't know is
Okay, let me give
so
you an
I
assignment.
feel
Let me don't worry. Let me give you an assignment. Let me give you an assignment.
all right, all
Um,
right,
I want you to stick with 2 hour structure, just 2 hour structure. Don't go to lower time frame to refine anything. 2 hour structure.
okay,
Look for
all right,
look for look for something like this. This is going to be
okay,
your entry. This is going to be your inducement. There's going to be stop on. So look for entry like this for long and target your previous high. Then the same
no,
thing applicable to yourselves. So look for something like this, just on 2 hour time frame, like of structure, inducement,
okay,
and stuff. Let me see what's. Don't refine on lower time frame. Just stick to this. It might be 2 trades a week, might be 3 trades a week. Just do this alone on 2 hours time frame, just higher time frame alone. Look
all
for
right,
setups that has this kind of things and play them out. Let me see if you still have a problem with identifying your POI. So if it does happen again, then I will know what next to do.
no, all right,
Just 2 hour
okay,
structure alone. Stay within your 2 hour
all right,
structure. Mark out your other block. On the 2 hour, play it out that way. Don't overstress it. Don't even stress yourself too much. Just look for structures like this once they play out like this, trade them. However the case may be, it might be on your demo account. Just make sure you trade them, and
All
let
right.
me see, and journal them down. Let me see the result. If there's a problem still existing, I will know. Then we'll know how to control. Don't
All
don't
right.
don't force the risk to reward. Might be 1 to 5, might be 1 to 3. Just trade them. I want to
All
see the
right.
difference.
Oh, no. All right. I'll do that. Thank you so
Sure.
much.
Are you sure you're going to do that?
You said?
Are you sure you're going to do it?
I uh, I don't have any other thing I'm doing. So, this is what I face. So, it's a must for me.
Okay. I'll be glad that you do it.
Yeah.
So sorry, I won't be staying long because I have a medical schedule by 1 o'clock and I have to do so.
You even tried for me today.
Okay.
So next time I will just work on that and then get back to you. So when I've had enough information on what you're giving me as an assignment, then maybe when you're free, we can share down the probably needs to do so.
Exactly.
All right.
Okay. Talk to you later then. See you later. Good luck and God bless you.
All right. Thank you.